Here's your Forbes Daily Briefing for Monday, April 1st. Today on Forbes, CEO Larry Culp's overhaul of GE will make him a billionaire. Larry Culp has burnished his reputation as an industrial mastermind with his restructuring of General Electric. On Tuesday, GE's CEO will take the final step in a 6-year process to break up the once sprawling conglomerate, splitting off the power business from its crown jewel aircraft engine division. Wall Street is giving Culp a standing ovation, and he's getting rewarded handsomely. After a 260% run-up in GE's stock price since the beginning of 2023, Culp has met the performance goals to get the maximum payout from a rich long-term incentive package, 1.74 million shares that are worth roughly $300 million at current prices. Under the terms of the package, Culp could retire and walk away with the money this August. But he's sticking around to run GE's aerospace business, the world's #1 maker of aircraft engines, as a standalone company, which will delay the date the shares vest till August 2025. Combined with the rest of his compensation from GE, and the fortune he made previously as CEO of the smaller industrial conglomerate Danaher, the massive stock award will make Culp a billionaire, Forbes estimates. He'll join a small club of 15 U.S. chief executives who have amassed 10-figure fortunes. Culp faced knotty challenges when he parachuted into GE as the first outsider to lead it. The iconic company founded by Thomas Edison was foundering under $135 billion in debt following the blow-up of the company's financial arm, GE Capital. Former CEO Jeff Immelt's costly bet on bulking up in power by buying Alstom's turbine business had failed, and investors had fled, with the company's market cap shrinking to $70 billion, down more than $500 billion from August 2000, when it was the most valuable company in the world. David Collis, a professor at Harvard Business School who's written case studies of GE and Danaher, and has had Culp as a guest speaker in his classes, said, quote, "There's not many people that have gone into a company, and particularly a company with a reputational legacy like GE, with that list of things to deal with." General Electric and Culp declined to comment on his compensation and net worth. Culp's incentive pay outstrips most of his peers. In 2022, the median value reported in financial filings by S&P 500 companies for their CEO's total compensation and unvested equity awards was $57 million, according to the data provider Equilar. For Culp, the comparable total reported by GE in 2022 was $175 million. In 2023, it was $237 million. In 2018, General Electric was in crisis when its board offered Culp the job of CEO. It had soured on Immelt's successor, John Flannery, after only a year, reportedly frustrated with his slow decision-making. Culp, who had joined the board the previous year, had earned a reputation as a details-focused whiz at improving manufacturing efficiency at Danaher, which he led from 2001 to 2014. Using a playbook inspired in part by the Jack Welch-era GE, Danaher's revenue and market cap rose 5-fold on his watch. Culp, who turned the board down twice before accepting, extracted a multi-million-share incentive package linked to GE's share price. At the time, CNBC's Jim Cramer said it was, quote, "the best performance-oriented contract I've ever seen." In the best case, if the stock rose 150% by 2022, he'd get shares worth at least $230 million. At the low end, a 50% increase would net him shares worth roughly $45 million. After the pandemic virtually froze air travel in 2020, and with it, demand for GE's aircraft engines, Culp's turnaround efforts seem to have paid off. Now, a few years later, Wall Street seems happy. Even after the steep climb in GE's share price, 14 of the 20 analysts who follow the company rate the stock a buy, with just one recommending investors sell, according to Bloomberg. Culp sharply reduced GE's debt, raising money by divesting units including its biopharma and aircraft leasing businesses. He preached a renewed focus on the customer and a philosophy of process optimization called Lean, which is based in part on Toyota's vaunted Kaizen methods. Culp has spent weeks at a time at GE factories, walking the floor with managers and engineers as they sought to speed up workflows and eliminate inefficiencies. For full coverage, check out Jeremy Bogaski's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.